Most people think silver should already be exploding right now. Inflation is high, debt is out of control, global tensions are rising, central banks are buying hard assets, and industrial demand keeps climbing. So why hasn't silver made the massive move everyone expected? That's the question almost nobody in mainstream finance wants to answer honestly, because the real explanation reveals something much bigger happening behind the scenes, and once you see it, you may never look at the silver market the same way again. Before we get into it, make sure to like the video and subscribe to Silver Signal because we break down the hidden forces shaping money, metals, and the global economy without the noise you hear everywhere else. Now here's where things get interesting. Historically, silver has never moved in a calm or predictable way. It stays quiet for long periods, sometimes frustrating investors for years, and then suddenly it moves faster than almost anyone expects. We saw it happen in the late 1970s. We saw it again during the 2011 rally. And every single time, most people missed the early warning signs because they were looking at the wrong indicators. Right now, many investors are waiting for silver to confirm the move before paying attention. But by the time mainstream headlines start screaming about silver, the biggest opportunity is usually already gone. The truth is, silver is trapped between two completely different worlds at the same time. On one side, it's treated like a precious metal and a store of value during economic uncertainty. But on the other side, it's also a critical industrial metal used in solar panels, electric vehicles, AI infrastructure, military technology, and advanced electronics. That dual role creates one of the strangest supply and demand situations in the entire commodities market. Industrial demand keeps rising year after year, but investment demand moves emotionally based on fear, liquidity, interest rates, and market psychology. And right now, that psychology may be the only thing holding silver back temporarily. Think about what's happened over the past few years. The average investor has been distracted by AI stocks, crypto rallies, tech momentum, and short-term market hype. Capital flows where excitement goes. But historically, precious metals tend to explode only after confidence in other assets starts weakening. That's when investors suddenly begin searching for safety, hard assets, and undervalued markets. Silver doesn't usually lead financial panic. It reacts after people realize something deeper is wrong, and that delay may be exactly why the current setup looks so unusual. At the same time, physical silver inventories have quietly become tighter in several areas of the market. Mining supply growth has struggled to keep up with long-term industrial demand projections, especially as governments push green energy expansion across the world. Solar technology alone consumes enormous amounts of silver, and many analysts believe future demand pressure could become much larger than current supply growth can comfortably support. But here's the part most people miss. Markets are not driven only by fundamentals. They're driven by perception. If investors believe the economy is stable, money usually stays in risk assets. But when cracks begin appearing in confidence, liquidity can move very quickly. Suddenly, assets that were ignored for years become the center of attention overnight. We've seen this pattern repeatedly across financial history. The problem is that most people only notice the move after it already begins. Another factor quietly affecting silver is the strength of the US dollar and interest rate expectations. When rates stay high, investors can earn returns from cash and bonds, reducing short-term urgency for metals. But if economic growth slows sharply, unemployment rises, or central banks eventually pivot toward easier monetary policy, the environment could shift fast. And if that happens while industrial demand remains strong, silver could face pressure from both investment demand and industrial demand at the same time. That combination is what makes silver so unpredictable and potentially explosive. Now, this does not mean silver is guaranteed to skyrocket tomorrow. Markets can stay irrational longer than people expect, and timing any asset perfectly is almost impossible. But what makes this moment different is how many global pressures are quietly building beneath the surface all at once. Massive debt levels, persistent inflation concerns, geopolitical instability, supply chain vulnerabilities, energy transition policies, and weakening trust in traditional financial systems are all creating an environment where hard assets continue gaining long-term attention. Even large institutions have started discussing commodities and strategic resources more seriously again after years of ignoring them. And remember, silver is a relatively small market compared to stocks or bonds. That means it doesn't take enormous amounts of money flowing in to create major price swings. When momentum finally returns, silver historically moves aggressively because the market is simply not built to absorb huge waves of sudden demand smoothly. That's why some analysts believe the quiet periods in silver can actually be more important than the rallies themselves. Quiet markets allow positioning, accumulation, and shifting supply conditions to develop without attracting mainstream attention. Then eventually something changes psychologically, and the market reprices very quickly. What's fascinating right now is that silver remains strangely under-discussed compared to how many macroeconomic risks are building globally. Maybe that continues for another year. Maybe it changes much sooner. But the gap between silver's long-term fundamentals and current public attention is becoming harder to ignore. And that's exactly why many experienced investors continue watching this market so closely, even while most people remain distracted elsewhere. The biggest financial shifts often begin quietly before the majority notices what's happening. So the real question is not whether silver can move someday. The real question is what finally triggers the moment when the market suddenly realizes silver may have been mispriced all along. And when that realization spreads, history suggests things can move much faster than expected. If you enjoyed this breakdown, comment below with your opinion on where silver goes next, and share this video with someone watching the economy closely right now. Because sometimes the markets people ignore the longest end up becoming the hardest to ignore later.